Maverick. Noun, unusual person. A visionary, leader, go-getter, an independent thinker. They see the vision for their life and pull that future towards them with an unyielding belief that things can and must be better. They achieve what most won't. Innovative, influential, daring, and direct, with a remarkably high tolerance for taking calculated risk. A foe to the status quo. This is Passive Real Estate Investing with Mavericks. Your host, Neil Timmins, has been involved with over $300 million in real estate transactions. He's a published author, commercial property investor, and real estate syndicator. This show is for those who want to learn how to earn passive income through real estate investing. Now, here's your host, Neil Timmins.
Welcome to Passive Real Estate Investing with Mavericks, where we provide actionable steps for you to grow your passive income and become job optional. During this episode, you're going to get to discover the recession-resistant asset class. For those of you who are new, I'm your host, Neil Timmins, and I love passive income from real estate. Now, before I introduce you to today's Maverick, I want to make a request that at any point you like what you hear, give us a thumbs up. And be certain to subscribe to the show so you never miss an episode. And if you love what you hear, well, give us a written review. Plus, be sure to take a look at the description of this episode as we packed it with thousands of dollars in free resources. Now, today, we've got the privilege to learn from a person who is in syndicator in self-storage. And prior to real estate, she had various careers. And we're going to talk about the pivot into real estate. It all changed when ultimately she got a passive passion, but all that changed when she got a passion for real estate. I would describe today's Maverick as somebody who's passionate about finding ways to recession-proof her income. I've got Steffany Boldrini here with me today. Steffany, how are you?
I'm great. How are you, Neil?
I'm terrific. Thanks. I appreciate you taking the time to connect up here. This is going to be a fun conversation because you're in self-storage. I know a whole bunch of folks in self-storage. So I always learn something new every time I talk to somebody in that business. But tell me this, let's start here. How did you first get into self-storage?
Yeah, great question. My mentor was a successful retail investor, and throughout my learnings, I was listening to podcasts and everything. And a guest in somebody's podcast talked about self-storage, and they said that is recession resistant and it does well in good times. And I was a bit, wondering where retail would go in the future. So I decided to focus in self-storage.
Nice. And tell me about your first investment in self-storage. Tell me about that first deal you bought. What was it? What was it? Where was it? What were all the makeups of it?
Yeah, it was during COVID. In the beginning of COVID, we were all having a hard time finding deals. It was very difficult.
Sure.
And it was a portfolio of some car washes and a self-storage property. And I had to buy the car washes for better. It'll be better later, but right now it's for the worst. Yeah. There will be a happy ending there. But yeah, it was a portfolio, and self-storage is fantastically easy to manage remotely. Car washes it has been a very difficult time. So we're going to repurpose those into self-storage, RV storage, and other things. So that was the first deal, and it's been great. I absolutely love self-storage, and you really just have to do a ton of work in finding the right deal.
Yeah,
because the ones that brokers put out there are, they already increased the rent. There is not too much value add, so you really need to find off-market properties.
So speaking of off-market, how did you source that first deal?
So this one was through Crexi. Crexi.com.
Yep. All right. So listed with a broker in the open market.
Exactly.
Got it. What was the size of it, both in, maybe units or square footage, and then price?
Yeah, it was a smaller facility, about 100 and something units. And the storage part was probably around $1 million.
Okay. Got it.
Yeah.
What were the, 2 or 3 biggest lessons you learned in buying that first deal?
Don't ever buy an asset class that you don't know nothing about.
Yeah.
I'm talking about the car wash.
The car wash, yeah.
Example.
Yeah.
Another huge lesson that I tell people all the time is to always apply with 2 lenders. I don't care, especially in the beginning of your career, because this not only has happened to me, and it has happened to many other people, where the lender that says that you're approved and everything is good to go, they will come a few days before closing and they will tell you that, oh no, we decided to either switch terms or not approve you, or demand a higher down payment. Any of the above can happen. So please always apply with at least 2 lenders. And the last lesson in today's world is to really check on the insurance. I know Texas and Florida are having really hard time with insurance right now. Some of them are going up 50 to 100%. And that is a significant increase. Mm-hmm. So really get quotes from a couple of brokers, insurance agents on that. And, also have a cushion there on your deal for the potential of it going up again significantly in the next few years.
That's a good tip. A lot. You're right. There's some markets that are very vulnerable to insurance premiums increasing at rapid rates.
Yeah. And that is, going back to retail, that is a benefit in retail and office because the leases are all triple net. So that
pass it through.
Yeah. However, on retail and office, there might be a cap on how much the triple net can be increased. So also please pay attention to that on the lease because they might only accept a 10% increase on certain things. So that is also something to really keep in mind.
Let's talk about, I want to talk a couple questions about this for those listeners who are active, and then I want to go down a passive standpoint. So apply with 2 lenders. Fair to say that the commitment letter isn't worth much.
Correct.
Like not much is in like 0, right?
Yes.
Yeah.
So verbal emails, until you have a signed term sheet, you have nothing.
Yep, absolutely. Okay, so let's go down the passive standpoint. What is the benefit for passive investors in this asset class?
In this and any other asset class, to be honest, in my opinion, right? Because we all know that it's a full-time job, first of all. It's a full-time job to source deals, analyze deals, negotiate the deal, close on the deal, get the loan, sign on the loan, operate the property, and bring the value add. So it's a full-time job. And many times you have to even split this full-time job with other partners, depending on how big you want to grow. So, from a W-2 employee's perspective, why not partner up with somebody from an investment partnership perspective, or invest passively in a syndication while you're still making that income on the job until you are able to be financially free or match your income with your investments. Then I think is a good idea for you if you want, to leave the corporate world.
What types of returns are you seeing in this world, in self-storage?
Self-storage is thankfully a decent returns, bare minimum, 15 cash on cash, and it goes all the way up to 25, give and take.
In order to achieve those, the implication of what you said is you're looking for value add properties.
Correct.
Yeah.
Value add, where the rent has not been increased in a while, where there's an opportunity to decrease costs, and that can be through cutting employees and managing it remotely. And also the ability to expand the facility, so build more. So those are the 3 main ways to add value in self-storage.
When you're managing them remotely, are you operating these with a kiosk? Are you operating it solely online? What's that look like?
Yeah, solely online. We do have an on-site person to walk the property once a week, lock units as needed, or check on other units as needed. However, we can, because everybody has a phone in their hands today, you just have a QR code if they're on site that they can just scan and sign the lease online, or they find you through Google Business and they sign the lease online again on their laptop if they find you through Google Business at home. And everything else is done with a team in the Philippines.
Yeah.
Any other coordination that is needed, or if someone is late on their payments, they call on the tenants and take it from there.
Are you self-managing or are you outsourcing?
We self-manage.
Self-manage, yeah.
Mm-hmm.
Tell me about your most recent deal, or maybe one you're working on now.
Yeah, we already closed on 3 properties right now that we're finalizing the raise for, and there are 2 in North Carolina and 1 in Colorado. They're all value add properties where the rent was below market, and then we're expanding on all 3 of them, building more units.
You've got some physical space in all 3 of them in which you can add more units to.
Correct.
What are the size, maybe, individually or roll them all together, all 3 of them. What's the size of the, square footage or unit count? What kind of dollar amount or what's the purchase price? Yeah,
when it's all said and done, it'll be just over 1,000, almost 1,200 units. We're between doubling or on average doubling the size of the facilities. And I'm sorry, what was the other question?
What's the total purchase price?
So with the construction, the loan, everything is $15 million.
Got it. And what are you? Yeah. What are you seeing, or how are you managing construction today? Are we on the back for you? Are you seeing us on the backside of COVID? Not really any delays. Certainly costs have increased compared to pre-COVID, but are you seeing any construction delays?
Not right now, because things have gotten better, and some material prices have gone down. So things are thankfully getting better right now, especially with the slowdown, with the market. Construction people are calling back and they are performing better.
Right.
But we have actually hired the seller as our local consultant for all 3 properties, because they know a lot of people on site. So that has been extremely beneficial.
How did you source this particular package?
This one was one of my partners. He's responsible for finding deals.
Got it. Yeah.
Yes.
That's the fun part about commercial real estate, isn't it? Is that you don't have to do every role. It really is a team sport.
It's a ton of work. My goal is pretty hefty, and a very successful venture capitalist in Silicon Valley once said he had exited a few startups successfully, and he said something like this: that okay, I could have kept 100% of my company, and it would have been a certain pie, right? A certain pie size is 100% of that pie. However, I hire the best people out there to help me grow this company, and I have to slice this pie in many different ways. And however, it's a much, much bigger slice that I'm getting at the end of the day. And that's how I view things in partnerships. We cannot do everything, ourselves and with the right people, and you have to vet them very well. I really recommend vetting people. There are so many questions you should be asking. And once you find the right team, nothing can stop you.
Yeah. So speaking of questions that you should be asking from a passive investor standpoint, what type of questions should they be asking a sponsor when they're thinking about, doing a deal with them, investing with them?
Yeah, great question. I think definitely track record. So in my example, I wanted to have my first deals on my own dime, learn the mistakes, make the mistakes myself on my own money, and then, accept the investor's money later. So that is, I think, huge and very, very important. What is their track record on their own investments and previous investments if they have had a longer career? And I tell my investors this. I tell them, go find somebody that I'm not going to introduce you to that knows me, that we're connected on LinkedIn. Find somebody and ask them about me or any other operator that you're dealing with. Ask them about the personality and their responsibility and follow up and everything else, right? Are they just talking, about big numbers, or is this true? Are they a solid operator?
Yeah, what I heard you say is identify the track record and then get references. Understand, outside of just them, is what do others say about them, and does a track record really line up?
Yes, absolutely. I mean, there was this guy recently, I forgot his name, in retail, right? Saying that he went from zero to $100 and something million raised in 3 years magically. Correct. And it was a little bit of fraud, apparently, allegedly, still under investigation. But, there were a few people that understood that in his circle, right? So please talk to the people around that person and find out what the real deal is.
Yeah, absolutely. What should passive investors look for when they're identifying an opportunity? Let's talk about self-storage. When they're looking at an opportunity with an operator, what should they be looking for in the deal? Past the operator, but in the deal itself.
Well, the basic things in real estate. Is it a good market? Does it have growth? Does it have a low poverty rate? We target 15% and below. And does it have a diverse industry? Is there demand? And the industry is the Detroit example. If something happens to the auto industry, sure, Detroit was over, right? So you need different industries in case something happens to one of them, if a city is fully dependent on that industry. And I would say, is there demand for this type of product? Are there too much vacancies? Or are in storage examples, are all the facilities full? What is the percentage that they are occupied? Are people moving there or not? And things like that. So very basic real estate due diligence, I think, for the deals.
When you take in passive investors, what kind of communication do you have with your passive investors on an ongoing basis from a reporting basis?
Yeah, we report every 3 months, a very short, simple, to the point, good, bad. And we decided we were doing monthly initially, and then we found out that there were a lot of questions that were not super relevant to the progress of the deal. So we decided that every quarter was a much better strategy for communicating with the investors. And of course, they can ask questions anytime.
Yeah.
During that period.
Yeah, no, that's terrific. Well, just this year, we launched our vault, a collection of resources available to our listeners. I understand you're making a contribution, really a guide on why invest in self-storage. Tell us a little about that.
Yeah, it's a very straight and to the point guide that I grabbed from all of my learnings on why storage is good and why is a solid investment during good times and bad times, and why I think is going to continue. So it's, again, very short, straight to the point with like the top bullet points for the industry.
Wonderful. You guys can get that at www.realgritvault.com and pick that up. Steffany, if people they want to find you, they want to connect with you, they want to follow you, where should they go? What should they do?
Yes, the website is montecarlorei.com, and there's subscribe pages and contact us pages, and I'm everywhere on social media, so you can find me on LinkedIn as well.
Perfect. Well, you guys can find that link below in the show notes for everybody. Steffany, it's been wonderful to chat with you. It's self-storage is a fun industry. We own in the asset class as well, and you're right when it comes to management. The ability to manage that remotely is really a breeze. There's a lot of positives that go into that, and you're right. I mean, across historical standards over the last 20 or 30 years, has performed very well in good times and in down times. And I know it's really a hot topic right now when the future looks somewhat uncertain. So I know people are positioning themselves in a spot where they can make it through any time, any environment. So I appreciate you coming on and sharing a little about this. So thank you.
Thank you, Neil, for having me. I really appreciate it.
You're very welcome. Till next time, I'll see you soon. To our listeners, pat yourself on the back. You guys have made it to the end of the show, and most people never finish what they start. If you received value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.